So the more I'm able to give you data through this tech layer, I'm able to at least offset some part of the risk.
Ultimately, most startups are funded because who is the person leading it.
Correct.
The business plan is not kind of written in ink, right? It changes. Every company changes every year. So is it possible in India to kind of move towards autonomous driving, which again will be enabled by AI and ML, and also takes care of investor concern about the human element?
So welcome everyone. Welcome to part 2 of this episode of our conversation with Divyanshu Srivastava. And last time we talked a lot of things around the EV ecosystem, especially from a financer's view. This time let's get back to a lot more details on how the EV industry can grow with a lot more finance, which is now going to come in.
Because this market is changing every 6 months.
Oh yes,
So I'm talking now.
right. So in 6 months when we meet up again, there's going to be slight, corrections in how.
This will be Magenta Mobility plus plus.
No, I think that's the fun of being in this industry. It's a lot of challenges, pure business challenges, but then ecosystem challenges are very different.
I have a question for you as
Oh,
well,
absolutely.
right?
Please ask.
So if you look at this entire space, right, I want to understand how critical is technology play in enabling this entire ecosystem.
You just asked this question a few seconds before I was about to ask you this. This is very interesting.
So I preempted your
Oh,
question.
yes, you did. You did.
No, because I need to, as a banker,
Hmm.
understand that technology as a horizontal, how critical it is for you to deliver one service to the customer, manage your operations, and is technology the real leverage? And how do you kind of gain from that leverage?
Sure. In fact, I think because this is a good conversation to have. Let's break it up into uh, technology as a solution for each of these 4, 5 layers. From an op, First of all, electric vehicle is a lot of data that gets thrown out. Each of this is like a mobile phone throwing up data. It's not only GPS data; it's about battery, it's about the SoC. Now, for each of the layers, it forms a different construct. For me, as an operationally, the fact that I'm able to manage and see where are all these vehicles, etc., becomes very important from an operational efficiency perspective. So, at a very base level, I will not be able to run a fleet of that size and scale without having the tech layer built in.
And these are built in-house?
These are built in house,
Okay.
right? Because these vehicles can emit out data, literally emit out. That's the word that I use. The ability to capture it and to make sense out of it. That's important. Second, for a banker, and let's talk about that, is for me, it's important because you're taking anyway risk on the ecosystem, on EVs as a C, and then as a company, all of it. So the more I'm able to give you data through this tech layer, I'm able to at least offset some part of the risk. And I think these are some of the very interesting conversations we had with the likes of SIDBI and others. And the ability to fund companies like us was on the back of this data layer that we could provide. And that's one of the things I think we should go back to the finances and say, listen, how the data layer can start to help you offset some of the risk which you are trying
Yeah.
to bake in. But more importantly, I think also from a nation perspective, this data becomes important from the number of kilometers, hence the number of energy consumption, which was not possible. I mean, earlier in the ICE, it was purely about the amount of liters of petrol or diesel,
Yeah.
and then you took a corollary of the number of kilometers by. But here you are absolutely able to get into kilowatt hour per kilometer,
Yeah.
and that will give you a different layer of operational energy efficiencies. I think that's where it is going to be.
And it also helps in your route planning,
Oh
fleet
yes,
optimization.
yes, that's basic to us.
That's basic, right?
Because here it's also not only about route planning, it's also about charging planning.
Yeah,
You need to
charging
know
planning.
where the vehicle needs to be for its charging, whether the charging is available. So the tech layer, in fact, one of the things I wanted to nudge you was when you talked about the 4, 5 pieces. There's this huge element of tech which needs to start sitting on the back of EV and mobility. Have you seen anything interesting conversations around that? Any interesting companies, conversations that's playing out?
I think most of the tech we have seen has largely been in-house,
Okay.
developed to cater their own businesses.
Mhm.
There are a few telematics companies we did interact with, but again, not very scaled up, sub 100 crore top line kind of
Right.
companies. But I was quite surprised that we haven't seen a tech provider for a more EV holistic ecosystem yet. Maybe it's on analytics, maybe it's on actually there are some companies doing very good work on the battery management side, BMS side, on the tech layer in terms of making your battery performance, doing analytics on how the battery is performing, and then kind of providing suggestion. But again, scale up hasn't happened, and that's a function of how quickly EV will grow.
Hmm.
But I think that market, I haven't, and we've met a lot of companies, still not someone who's kind of really kind of uh, is an outlier in the market yet. I don't know, maybe you have come across someone.
But isn't that something like a conundrum? Because largely equity always chase tech,
Yeah.
right? And in the case of EV, I'm seeing a slightly, a different construct in the electric vehicle mobility
So
space.
follow on question, exactly. So that's what I want to ask. That is there a differentiated tech in this space, right? Or it is something which is not very difficult to create in-house? Or do you need a very strong technology understanding to really create something which becomes inevitable for everyone to adopt?
So I think the answer would be a layered answer, but the
Yeah,
first level would be something easy because uh, the first level of construct of picking up the data is basic.
basic.
Right? I don't think there's a differentiated technology there. It's a CAN-based system, which is an open protocol. You just need to have it. What is important is how you are doing it at scale with multiple OEMs. That's the differentiated. But what you're doing with that data, that's the important
So
piece.
yeah, so exactly. So I'm an energy banker, right? So I don't understand tech as well. I see so many AI, ML companies across industries now. There's AI happening on oil and
Correct.
gas, AI happening on energy. What is the AI, ML
In
orientation in the EV space?
oh,
Because there's so much data being generated, right? Someone needs to work on data and use it
without, I mean, there's a lot of AI, ML being, I mean, use loosely,
loosely.
right?
Exactly.
But brilliantly in the EV space, there's a lot of AI, ML which can be embedded. Okay, so right now a lot of data comes and sits on the data lakes, as they call it. I mean, there's data on GPS, which is the vehicle. There's a data on battery temperatures, voltages. In fact, there is also a lot of data on what is the road, as basic as the amount of energy that is consumed, be it voltage, current, and you link it to GPS, you are actually able to tell what exactly is the traffic situation,
Hmm.
your energy consumption for traffic, time of day. And all of this would require a lot of AI constructs to come and sit on top. Because the data layers, I think right now the industry is working on the data layer,
Okay.
be it the OEM, be it fleet operators like us or telematics companies. The AI element will come, and the best part about this AI element will be how it works with the energy systems.
Hmm.
I think that's where I think is where, but I think we are at least a year away before we really have to say AI ML sitting on top of this data that is being
You know,
generated.
and the reason I ask is as someone who's done a lot of power sector, right? We interact with entire ecosystem, discoms, grid. The grid is not designed to, take in so much of EV requirement.
Right,
So the data has to be fed in so
right,
that they can upgrade their network, etc. That's one layer. Second is when I speak to a lot of investors, one concern is on, especially in the fleet businesses, drivers.
right.
So one is obviously retaining them, other is the liability in case of an accident or any other mishap. So is it possible in India to kind of move towards autonomous driving, which again will be enabled by AI and ML, and also takes care of investor concern about the human element?
Right.
But maybe we are far away or we may not ever get there, but happy to kind of take your view on
Very
that.
interesting. I mean, the autonomous driving element will come to India. I mean, well, let's not shy away from the.
Possible
Yeah, it is possible. I
with
mean,
the
there are
network traffic
with the
sector.
traffic situation. I mean, the entire concept of
AI ML is,
intelligence is
yeah.
to kind of replace. But what I see that is going to happen in the passenger transport, because what happens in the cargo transport, there's an element of lift and shift also.
Hmm. Hmm.
So that's where I think the autonomous driverless transport system is going to come. I wouldn't want to bet on it in the year or two, but
I know.
I think there are some very good companies who are working in this space. That's the sense I got.
Because that will be enabled by your AI and ML kind of
Absolutely,
technology.
absolutely.
Yeah.
And that's why I always believe that the EV industry or the clean mobility industry is going to be data driven.
Hmm.
And from an energy construct, it's going to become a data construct very soon. So
Yeah.
I am so whenever we are having a conversation with our clients, also I think that's one of the conversations which keeps to happen.
Yeah.
Now, which brings me to the now so much data, so much information, so much of clean carbon credits that goes that's going to be built up. What's your take on this entire carbon credits, and whether you, from an investor perspective, ever embed that into your business economics?
So, talking from an investor perspective,
Yeah,
right? If you're looking at a business model which needs to be viable basis a carbon credit, which is in a way a regulatory matter, right? And there has to be an ecosystem around it. You will obviously see it with some sort of skepticism because the jury's still out whether you will potentially get the benefit. I'm talking about Indian context because there are various standards, right, which you need to adhere to get benefit. There's something called as Vera gold standard,
right,
GCC, multiple types of carbon credit
right,
standards. The challenge is not on the supply side because the moment you put up a project which is eligible for carbon credits, you are generating those many carbon. I think the issue what we have seen as bankers, and again very banker
yes,
high level understanding is in the offtake side.
okay,
There are not enough takers of market or depth in the global market itself for
mm.
buying these carbon credits, which are of various standards, right? And someone needs to kind of get into each of those standards. But there was a very brief period of time where there was a lot of demand and the market went to almost $8 or
Yes,
$9 per credit. Now it's in few cents if you find an offtake,
yes,
right? So if and you have to make this business plan for at least 5, 10, 15 years. So how do you ascribe a value to a carbon credit which moved from $8 to a few cents within a space of 18 months,
correct,
right? So multiple issues need to be solved. One is the right framework, the regulatory regime. Again, India needs, and I think government is working on that as well. India needs to have its own regime. Then we need to provide enough liquidity in the market, so it needs as many buyers as sellers, and there has to be an incentive for buyers as well, right?
correct.
Right, for to buy those credits. But right now, I think still very early stages.
So you
To
should not build up a business case on the back
you
of
should,
carbon
you
credits.
should not.
Perfect. That's a good
Yeah,
position to
it is an upside
have. Mhm.
for you to potentially not bake in today.
Correct. So it's an upside. It's kind of a bonus. If
Yeah,
it
if
comes,
it
great.
comes, if it comes.
Otherwise, you don't build your business
So in
model.
an M&A deal, what we typically negotiate is a pass through. If it comes, it comes.
Now, I'm just going to move to slightly basic in terms of our conversation, purely because we have a lot of viewers who want to really understand the investor's mindset. I mean, these are young guys who want to set up their own entrepreneur. They are on their own entrepreneurial journey, and seems to be something very here and now, very easy to get into this space. From a, let's say, a new startup starting to think about investments, take us through a journey of how he should look at an investment journey into
Yeah,
his company, and you can be absolutely abashed about how it should be because there's a lot of unlearning. I think the ecosystem needs. So go ahead.
yeah. So if it's a startup starting kind of completely afresh, right? I think you too, and right now talking from an investor lens, I think any investor in India will be getting 10 deals a day in this in his inbox across the spectrum.
Okay.
And I'm sure they don't have the bandwidth and they won't be able to differentiate one versus the basis a teaser. We as bankers are also guilty of sending out these 2-pager, 3-pager introduction of the company on no name basis as well. So you
Mm,
don't even put the name, right? Because of confidentiality. So look at this. A company, 15,000 vehicles, profitable. B company, 17,000 vehicles, profitable. But what is the business differentiation? He doesn't know, right? Most times, maybe they respond or not respond, depending on. So first of all, I think what is important is to understand what is the investor set out to do in the Indian market? What is the mandate,
mhm.
right, of that investor? That can come through other, colleagues in the industry or through bankers or through other investors. But you need to network with that ecosystem who knows that investor,
Okay.
right? That is the first step in terms of filtering. You cannot send a EV teaser to a financial services investor. And it has happened and it keeps on happening.
Got it.
And the response will be, sorry, this is not in my mandate. So first is know the investor well, which is know your audience well, right? In
Right.
the end. In this market in current times, I think every investor is focusing on profitability, whether unit economics or overall. So keep your costs low, make sure you do business you are doing, you're burning as less cash as possible. Uh, if not today, there is a part two profitability in the next few months because I think the capital is chasing only those businesses which are profitable or promises to be profitable with scale in the immediate next few months. So that's also very important. Third is don't raise more than what you need. As a banker, I will obviously say raise as much I make more money.
Right.
But I've seen business plan which need only $50 million chasing $100 million kind of a check size because there was this entire you know feeling of satisfaction or feeling of accomplishment associated with the fact that I am a unicorn and I'm $100 million raise, etc. It
Right.
doesn't matter in this market. You should only raise how much you actually need because everyone is asking to the last cent end use. Right?
Correct.
And investors obviously are asking very, we are getting into your models, business model, very business plan, in depth, understanding where the money will go. Because, and the reason is the capital is again very limited. If you've seen the fundraising environment, it has been very tight.
Right.
So if someone is sitting as an LP, as a GP for Asia, he will allocate some capital to India. So the GP in India has to make best use of that capital.
Right.
And that is why the end use is becoming very important. So only raise uh, what you can. And when you take a business plan to any investor, make sure the assumptions have a lot of work done behind them. And you could defend your assumptions very, very well on the basis of your conversations or contracts. And you will demonstrate that you're standing behind the business plan. And the last is the promoter himself, his credibility. Ultimately, most startups are funded because who is the person leading it.
Correct.
The business plan is not kind of written in ink, right? It changes. Every company changes every year. But if it's the right man leading or navigating the entire thing, then I think that really helps from a fundraise perspective. So the credibility of the top team that is more important than anything else in my view.
In fact, that's one of the things was going to be my next question is India, from an investor's lens, India has gone through its largely a lot of downs in the over the recent couple of weeks, months around founders not living up to the governance standards. How important is it? I'm very sure the answer is yes, it is very
Yeah.
important. But take us through some of the real facts around this and how important it is from an investor perspective, because a lot of people don't really take, uh, especially the startups, take it for granted, really. Governance as a mind. So, over
So
to
this is
you.
very interesting because what as bankers, what we've started doing is taking deals where the client is absolute blue chip. And we, in any selling document or collateral paper, the first item we are writing is highest standards of corporate governance when we
Okay.
are going to any global investor, because that's the first requirement for any investor looking at India. Because some of them obviously burned their hand because of whatever governance, etc. had. And it is becoming very, very important. And governance comes at across all levels, right? And it has to come from the top.
Right.
So your audit, your internal audit, your operations, uh, cash transactions, or cash flow movement, etc. All that has to be kind of adhere to global standards. If it's a US fund, then FCPA compliances, all that has to be complied with. So once you lose the name, you lose the name, right? And I think India has suffered on that count a bit. And that's why you will see investors compromising on returns, but only partnering with blue chip counterparties
Got it.
because you don't want to kind of err on the wrong side of governance.
Right.
Right? And that's why some of the capital will not potentially move towards startups, but maybe the large OEM because of the brand name they have kind of created for themselves.
So, for a startup who's out there trying to raise fund, what are the first few things he needs to do on the ground? What are the minimum basics that need to be in place? When you say governance, what would it mean?
So what happens in any startup is you're always chasing business, right? So the process and systems kind of lag behind,
Mhm.
and it is always a catch up between process systems and then the business. So I have seen startups where the accounting function is not in place. There's a CA firm which is kind of managing it, or it is outsourced someone who's the reporting standards I've been told by investors in some of these startups are not as per what the requirement is. Uh, Potentially how the operations are run, HR function. And there is cost to each of these, right? So
Right.
the person sitting at top has to do a cost benefit of putting all these together vis-a-vis spending money on one business.
Correct.
But maybe once you've done Series A, Series B, all these kind of needs to fall in
All in
place
place.
because Series C and Series D will become challenge because these are large checks which will come in.
Right.
But some of these functions have to kind of roll out, even if they are not very kind of large, but to the certain extent it's needed, they are important.
Right. One more important question that many people have asked me also personally is, listen, what should be your position or when are you going IPO? What is this entire thing about IPO and what's your take on a standard response to
So right now it's a great market for an IPO, but IPO is a market which is cyclical, right? So I think, and most bankers will tell you that it's about timing,
this?
right? You need to catch the right cycle. It's a great outcome for any company, but you should not look at IPO from an exit perspective, right? IPO does not necessarily offer an exit to your investor. It's another a mechanism to potentially get liquidity in the company. Right now, Indian markets are offering great valuations on the capital market, and that's why you see a bunch of these companies going towards an IPO. But it also comes with a lot of responsibility, the kind of reporting requirements. Then you are running on a treadmill, right?
Right,
Because there's a quarterly pressure, there's an annual pressure. So you should be open to examination on a quarterly basis.
right,
Right now, you're in a private setup, right? You can have good quarters, bad quarters. The sophisticated private equity investor understands, right? Or you may want to do a capex, something which leads to a negative cash flow, which a private equity investor understands. But in IPO market, I think it will be brutal. So the moment you have negative free cash flow in a certain quarter, in certain year,
just
you
hits you.
you have a lot of questions
Sleepless
in the
nights.
analyst calls to answer. But I think that's where the end game is.
Uh-huh.
But you should not try and do IPO before it is needed. You should definitely reach a certain scale, size, and the structure in terms of process, systems, reporting, etc. As mentioned in place before. Think an I think of an IPO. Right now, a lot of SME IPOs are also happening. The market is such that everyone is able to get listed and attractive valuation, but we have to see till when.
Got it. One question around from a banker perspective is, and the industry. Let's talk about TV industry. What's your punt into the future in terms of, while I'm not a great fan of the unicorn, the term unicorn, etc., but what do you think is, how many companies do you think are unicorn, lined up for unicorn in the next couple of years? Are there any bets that you are interested in?
The conversation continues in the next part of the podcast.